In today's video, we're going to be comparing Yieldmax to Defiance funds. Which are the better funds to live the FIRE lifestyle with? FIRE stands for Financially Independent Retire Early. I have 3 reasons why I think Defiance is superior to Yieldmax funds, but please leave your comments in the section below if you disagree. Yieldmax and Defiance funds help us live the FIRE lifestyle and earn over $300,000 per year in dividends, as you can see below, and our performance shows that we're up 19% for the year. We're beating all of the indexes with Cornerstone, Yieldmax, and Defiance. We're up 19%, the S&P is up 8%, the Nasdaq's up only 8%, the Dow's up 3%, and the Russell's up about 1%. So we're beating all of the indexes hand over fist with Yieldmax, Defiance, and Cornerstone, which help us live the FIRE lifestyle. If you need help doing the same, email me for my e-guides at akintod48@gmail.com. When you buy my e-guides, Discord access is free for life, and my phone number is free for life, so just keep this in mind. Or if you want my phone number and Discord access without my e-guide, you can just click the join button on my wall, or I'll link that in the description below. So I have 3 reasons why, again, Defiance is superior to Yieldmax. And as you know at this channel, for every $1 you put in your account, you get $4 of purchasing power. I'm just using a fraction of this $1 million in purchasing power to get ahead. My margin debt of around $300,000 is now $163,000 because I just took on a loan. So if you're wondering how my account jumped by about $150,000, that's because, again, I took a loan, and my dividends help me qualify for loans. So how do I keep leveling up my account so often? It's because I get loans off of my dividends. Trading gains don't qualify for income or loans. You have to either have pay stubs or dividends. So I use my dividends to, again, qualify for more loans, which help me live the FIRE lifestyle, because these loans, not only do I get loans to level up my account, but I can buy a house, a car with these dividend funds that qualify me to banks for a loan. So if I don't have dividends, then I have to have a job in order to get these kinds of loans for a house or a car, or even personal loans. So this is what's so important to the FIRE lifestyle. You need dividends, which we earn, again, around $300,000 per year in dividends, and these help us qualify for whatever loans we may need in life. So my dividends of around $300,000 will pay back my debt in less than 1 year, obviously, and I have bills of about $50,000. When you pay off your debt with your dividends, your account goes up, and our debt should be gone, and our cash balance will be plus $100,000. Of course, I'm going to keep putting more debt to work. I never like to pay my debt down for long. Once I pay it down, I always add more debt, because this is low interest debt. It's around 6% interest, and if you don't use debt to get ahead, how are you going to get ahead? All of the greats that I know have used debt to get ahead. How did Elon Musk buy Twitter? He bought it with margin. Warren Buffett took a loan from his parents. Corporations use debt to get ahead. So if this doesn't show up on a credit check, well, then I can just use this debt at 6% interest to make profits off of my dividends, which are 50% plus. Defiance has 50% dividend yield, 70% for QQY, and almost 100% for IWMY. So my interest of 6% or so is nothing, and I've negotiated down twice. Many of my clients who bought my e-guides did the same thing, because when you buy my e-guides, again, you get my phone number for life. So I help you negotiate your margin rates or walk you through maintenance. Whatever you need help on with your brokerage account, I'll help walk you through it. And if I can't answer your questions on your brokerage account because I use E-Trade, whereas every other brokerage account is different, well, the nearly 1,000 members here on Discord should be able to help answer your questions. We also alert you of the Cornerstone rights offering announcement here on Discord, in case you're wondering what I do with Cornerstone. But for now, we're talking about Defiance. So here's the first reason I have for everyone on why Defiance is superior to Yieldmax funds. The first reason is Defiance actually goes up on down days. As you can see here, QQY was up 0.41%, whereas if you look above, the Nasdaq was down 0.03. So QQY actually beat the Nasdaq again on a down day. So this is how I use margin debt of around $300,000, which again is now down to $150,000. But even when I had the $300,000, you notice that my drawdowns in my portfolio were not that big on down days. That's because we put around $200,000 of our dollars into Defiance, and Defiance, as you can see here, once again, was up on a down day. So of course, margin isn't that risky, where on down days you have funds that go up on down days. And QQY, we just want this thing to go sideways. Yes, it has a 70% dividend and it decays here, but if you hold the 70% dividend for 2 years, you're more than paid back. So I don't understand the argument against Defiance funds. I had so many comments on my last video trashing Defiance, saying they prefer Yieldmax over Defiance. Why? I mean, Defiance has much bigger yields, And yes, they go sideways to down like Yieldmax, but they'll be up on down days. Let's go look at YMAG. What was YMAG down today? YMAG, it was down 0.15, which is pretty good. What was YMAX down today? YMAX down 1%. Whereas again, QQQY was up when the NASDAQ was down. So that's the first reason why I like Defiance funds over Yieldmax. The second reason why I like Defiance funds over Yieldmax, if you remember my last video, is you know that Yieldmax has 50% maintenance. Okay, that's a killer to the FIRE lifestyle. If you go to QQQY, you'll see that its maintenance is 30%. This freed up thousands of dollars in our available withdrawals. So we had our equity position rise by about $30,000 just because of that maintenance change from QQQY. It's almost like they gave us free money. If you need help understanding maintenance, that's in my volume 3 e-guide. That's also why I like Cornerstone, because not only is QQQY 30% maintenance and it barely takes up any of our equity, but Cornerstone CRF has 30% maintenance as well. So this is why I put $400,000 of my dollars in Cornerstone, and this is how we outperform the market. It's with Cornerstone and Defiance. Cornerstone is a 4-star fund that tracks the S&P mostly, and it has a 21% dividend that it drips down at the NAV for free money every month. So here's the chart for Cornerstone. If you're getting the 21% dividend here, then it's dripping the dividend down here at the bottom for free money every month. That's why Cornerstone is a 4-star fund in my opinion. Not only does it go up left to right on its chart, when you look at a Morningstar chart, you see this chart, it's going up left to right. Well, if you go to Cornerstone's chart, well, obviously it goes sideways to down, similar to Defiance. So everyone's going to claim that the erosion in these funds is too strong, but you have to factor back in dividends, drips, and rights offerings. Many closed-end funds like Cornerstone have rights offerings that are very advantageous for you, because not only do they give you big dividends, 20% dividends, and they drip those dividends down at the bottom at the NAV here. Cornerstone is the only fund that I know of, by the way, that does the dividends down at the NAV. Many closed-end funds have rights offerings, but Cornerstone has a rights offering, a 21% dividend, and it drips down to the NAV. So it's the best closed-end fund that I know of. Also, Cornerstone is one of the largest closed-end funds in the world. Go look it up. Okay, so they also give you rights offerings, which help you level up your account. You take the 20 to 30% premiums you get in Cornerstone per year on top of the 20% dividend buyback after the rights offering. Again, we alert you of the Cornerstone rights offering announcement here in the Discord chat room. And if you need help playing Cornerstone for its rights offerings, that's in my Volume 4 e-guide. So the first reason why I like Defiance over Yieldmax is that they're actually up on down days, or on many down days in the market, Defiance will be down less than the market itself. The second reason why I like Defiance is, I just alluded to this fact with you, it has lower maintenance than Yieldmax. So if Yieldmax is 50% maintenance and Defiance is 30% maintenance, well, I get to live the FIRE lifestyle much easier with Defiance, because we need high available withdrawal to live the FIRE lifestyle. We want to be able to withstand over 20% corrections in the market, as I always say, or you're in a margin call. Well, now we can withstand over 50% corrections in the market because of this maintenance change with QQQY. We now have so much more equity available at our disposal that not only will we withstand 20% market corrections, but I can swipe my E-Trade credit card and go wherever I want in this world, even with this debt. So I can just add to this debt. I can add thousands of dollars of debt. I can buy a house, car, clothes, shoes, whatever I want. Even with this debt, I can withdraw out of my brokerage account. So that's the secret to debt. Okay, it's low interest, and you can withdraw from your E-Trade brokerage account whenever you want with your E-Trade credit card. That's how you live the FIRE lifestyle away from a 9-to-5. The third reason why I like Defiance more than Yieldmax is that Defiance has similar yields to Yieldmax. In fact, even higher yields than Yieldmax in some cases, but they have the entire index exposure with Defiance, whereas with Yieldmax funds, you might only have a YMAG or a YMAX that has a combination of funds, a small handful of funds in it, but not the entire index. I like Defiance because it has the S&P, NASDAQ, and Russell. The S&P is JEPY, the NASDAQ is QQQY, and the Russell is IWMY. And that's why we are down today, by the way. Small caps were down, the Russell was down, Bitcoin's down. That's why we still outperform on most days, because we don't put a lot of money in small caps or Bitcoin. We put most of our money in the good indexes, the most popular indexes, which are the S&P and the NASDAQ. And if you go with Yieldmax, you're only getting a handful of those names once again. Also, Yieldmax falls by the amount of the stock or those handful of stocks, because they have call options that they sell, but they also sell puts, so they can fall by the amount of the stock one for one entirely. Whereas again, Defiance, they don't sell the call and sell the put. They sell 0 DTE puts to where they actually can outperform on down days because they're collecting those premiums that expire that day. So they're going to pocket something. Whereas Yieldmax, they sell the puts to mimic the stock on the downside. So they sell calls to get you some exposure to the upside, but they cap it. And then they sell puts so that you get that 1-for-1 exposure to the downside with Yieldmax. Whereas with Defiance, they sell 0 DTE puts, much different than Yieldmax. And you're going to pocket premiums when you sell 0 DTE puts because whatever is left on the expiration that day, you're going to pocket that premium. That's why we can be up on down days with something like a QQQY. So you don't really have to understand 0 DTE. You don't have to know all about options. Just know that I like a completely diversified approach when it comes to the FIRE lifestyle. Like Cornerstone, Yieldmax, and Defiance. Yieldmax, they go sideways to down. Some of them move up, but they have their upside capped and they have full downside risk. QQQY has its upside capped as well, but it's got the full indexed exposure and it has less downside risk than Yieldmax because as you can see on a down day, it was up, whereas again, Yieldmax stocks were down. And lastly, we have lower maintenance now with Defiance than Yieldmax. Yes, Yieldmax has Microsoft, which is one of my top holdings, and that has 30% maintenance. But other than Microsoft, there aren't really any other 30% maintenance names in Yieldmax. So that's why I have to stick with QQY because it is 30% maintenance and it's the entire index, whereas Microsoft is just one stock. Again, if you need help understanding maintenance, that's in my Volume 3 e-guide. Remember, when you buy my e-guides, you get free access to the Discord chat room for life and my phone number for life, so just keep this in mind. And also, we alert you of the Cornerstone rights offering announcement here in Discord. Also, if you want to bypass buying my e-guides and you just want my phone number and Discord access on the side, you can click the join button on my wall, or I'll link that in the description below. And please don't forget to like my video because that's good for the algorithms. The more you like my video, the more other people get to watch these videos and learn how to be financially free. And I'll talk to you soon, everyone. Thanks.